Okay, so week commencing 27th of January analysis. I'm going to use the Forex Factory because a lot of the times the economic calendar has been missing stuff, so I don't want that to happen again. And it just looks way better, and I've seen ICT and other inner circle ICT methodology traders also use it, so I'm just going to go ahead with this because, uh, you know, it's clean, concise. If it gives me everything, then why wouldn't I? And for example, stuff like this, so this Bank of England, it's not there, and we know that's a big factor, so yeah. I'm gonna be sticking with this. It's nice and clean. Now Monday, new home sales 3 p.m. Not really a concern unless you're trading New York, in which case, if it fails to distribute or expand to the higher time frame drawn liquidity, then that means we're just gonna likely waiting for the figures to come out and use that as a sentiment either for Judas or an expansion towards the draw. So London can still be something that we may potentially see a good move basically in. Tuesday, consumer confidence 3 p.m. So again, you might have to wait for that to come first. 2 p.m. as well, 1:30. There's a lot of news, so definitely gonna have to wait basically. Wednesday, Bank of England. Yep, definitely avoid that because it's very volatile, and of course, no question here. Now with the FOMC statement press conference, I'm just gonna see what my notes say, but I don't actually think this is. It depends how we play out. If we open and do a lot of movement, then this is just lackluster. But normally, if it's the interest rate decision, I know that's volatile. Oh, sorry, I think they just call it different things. So interest rate decision. Okay, they just call it Fed's federal fund rate. So the same thing as interest rate. So that's an extremely volatile event. You definitely want to be steering clear of that. Even I would say don't trade the entire New York entire day, or probably just be done with London, because it's going to be volatile. But at least it's going to set the stage for Thursday. The distribution is likely to have started. And then Thursday, 1:30 and 3 p.m. news. Friday, again, some news here. So be mindful of that. Chart wise, it's actually going to be an interesting week. Very interesting week, actually, because unlike normal, where I have a very clear drawn liquidity, this week I'm not. I have a rough idea, but I need that rough idea to be confirmed by price, by technicals. Okay. I'm going to be looking at some fundamental analysis in more detail. We're going to be including the bond market, which should have an inverse correlation with the DXY. Because if it's not inverted and doing the opposite of what the DXY is doing, then that means there is a Kraken correlation, which means that one of them is being manipulated, and normally it's the dollar. So we're just going to check that. Now, let me just start here first, okay? Because this is nice and simple. Now, typically, you can see that SIBI, sorry, was closed completely here. So straight away, some signs that we are reversing towards risk on from risk off. You drop to a lower daily time frame. These three SIBIs, two of them, I guess, have been run over. Market structure shift here. That seems to be, if you're able to lay a body above that, then we can definitely start seeking some premium arrays here in this leg of price action, such as this fair value gap SIBI and this one eventually. It can trade up into in terms of a DXY again. Technically, it has also created a market structure shift here, breaker type formation. This bearish breaker is going to be interesting. This black candle over here. Uh, you know, the most we should retrace is this SIBI. And I want to see a body closing below the mean threshold of this breaker here. And if we do that, then of course we're going to be looking at this BISI and this low here. But then again, we need this to be confirmed. How do we do that? By having no body close above this, or the mean threshold of these two are going to be my qualifiers. You have the order block here daily, of course, not to mention. So these are the things I'm looking at. Now I still think it can reverse and go lower. Chances are less of that happening. Monday open will give us a better idea, but my gun to head for now is still going to be risk on. Okay. So with a big event such as the the rate announcement. Which day is that on? That's Wednesday, yeah. Before Wednesday, we can stay in counterparty here in premium, risk off basically. 4 hour chart, yeah. So in these 4 hour BISIs, and then come Wednesday, we will have the I think distribution started, as long as my assumption about it being risk on is correct. Okay, so that's a rough expectation that I have. It's also going to be interesting how we open, okay? Because if we open and attack the uh, sorry, so this is the so if you attack the risk on side from the get go, that means that the risk on bias isn't that strong because it should always go opposite to what the weekly direction is first. Typically, that's how it would look like. So next up, I'm just gonna go over the bond market, just so we can see dollar in a full view, basically. So bonds, as you can see, there's 5, 10, 30. Generally the same vicinity, apart from the 5 looks like, which is a little bit more bullish, I guess, compared to the 10 and the 30, which would, I guess, require more movement basically to put them in that direction, as opposed to the 10 and 30, because they would require a lot basically shift. Now, um, if you look at it, that shift in market structure that I was referring to before, it it's obviously, as we know, switching things to risk on, as in people are not going to want to put money in dollar but other assets, so that the money is actually going to leave the dollar. And by that I mean the investors that have the stakes in the dollars, basically the investments, they're going to want to withdraw, because they want to obviously take the money where the yield or the profit is better than the dollar, obviously the return that they're getting now. Normally, as you can see, so far the dollar had a good yield, good interest rate, and then of course it was just going up and up and up. Of course, if I just bring up the 10-year here, you can see inverse correlation, as we would expect, right? This is coming down. Now, here, this is the important bit, right? You can see here there's a market structure shift with this big bearish candle. Likewise, there's one here, okay? Even a breakaway gap as well. So that does just confirm it, that we're not just looking at some isolation move. It's definitely happening. Of course, that rate announcement that comes out Wednesday evening, that will definitely nail it in the coffin. It'll because a lot of the times it's going to want to expand to the weekly side. I'm not saying that will happen. It may not, okay, but a lot of the times that is something that does better to keep an eye on. Wednesday evening, that's when it's going to be, I think, clear after that. But so far, it looks risk on. So some annotations, sorry, just want to quickly add them on. So here, since we're shifting to risk on, it looks like, of course, this is going to be sealed once that Fed interest rate decision is out. But you can see here that those daily BISI levels, sorry, CB levels here, will be key as a stepping stone going up. Weekly BISI, CB, definitely do not want to see a body laid below 50% of either of these CBs actually. We're really bullish. So should stay here.